What up? It's Nate from Grindhouse Capital. I'm chilling here with Raw Proof.
Hey, what's going on? This is Rob Proof, and I am brand new to cryptocurrency.
But I was trying to put together the other day. I heard somebody say that those people that hacked that pipeline was asking Bitcoin ransom to release it.
Oh, wow.
Yeah, and so I started putting together this thing where, back whenever I was trying to convince my dad, and Bitcoin was like 3K, and he was trying to show me these silver rounds and show me, these are some I'm going to order. Do you want to go in? Because me and him used to collect precious metals and shit. So whenever I was looking at it, I was seeing they were selling for like $20.79 because they were silver round coins. So that's a little bit more than just say like a bar of silver. You can get it for cheaper, closer to spot. But when you get them struck as coins, they go up a little bit in value. So it was like $20.70 for the silver. But if you bought it in Bitcoin, it was like $20.15 or $20.09 or something. They were giving you a 70-cent discount to buy in Bitcoin rather than use your bank card or whatever.
Right.
I was like, this has got to be a clear indication. The people that's holding the silver in the rounds already are giving you almost $1 discount to get your Bitcoin. This is like a real tangible, I don't know what I'm trying to say, a tangible example.
Asset.
Yeah. So whenever I heard about the hackers wanting Bitcoin to release the thing, I started thinking that it's kind of weird how they are hackers by nature, but the one thing that they wanted to make it all right is the one thing that they can't hack. That's only good if it's unhackable. That's the thing that they valued the most as hackers. But then the more we opened up like 10 different things, and I never could find any more mention that the hackers wanted Bitcoin. So it like unraveled the whole story I was trying to put together on it.
Oh, wow. Yeah, I did not hear that, but I'm not surprised at all. I did hear that whatever they were asking, they were paid out, and supposedly they look for people that have certain types of insurance policies. Um, so that way when they do this ransom, is it ransomware? Is
Yeah,
that what
that's
it
what I
is?
heard.
So they look for companies that have a specific type of insurance, so that way they'll be more prone to paying what they're asking for because they'll just get it back in the long run.
Yeah.
Thieves.
So, man, what was some of the terms? Let's see. You was trying to get into staking. What was you trying to check out on that front?
Yeah, yeah, staking. I was wondering about staking and how exactly that works. My first impression or my hypothesis was that I take my coin and I put it inside of a different location and it's pretty much off the market and it's collecting a certain amount of interest. Um, but the amount of interest is the number of percent multiplied by how much the coin was worth at the time that I staked it. That's what I was assuming. And then if I unstake it and put it back into the market, it's going to be worth whatever it's worth that day or at that at that point in time. Is that about right?
All right. Some of it. So, in most places, now I know that probably more specifically you're talking about Crow. So, and each of them may have their own kind of ideas of the way that they want it to play out. So, for example, like whenever I got things on BlockFi, they pay out once a week. And when I got things on Celsius, they pay out once a week. Whenever I got things in KuCoin, they're paying out daily, you know? So I believe now the fact that they are paying out so much, all right, so say something's earning at, just to try to make our math easier, I'm gonna say 10%. And
Right.
this is an accurate example if we're talking about, say, stable coins. They'll earn it like 10% most places. Or 8 to 12, you know what I'm saying? So we'll call it 10.
Hey, Nate from Grind Hustle,
Yep.
Grind Capital. Let me ask you a question. What exactly makes a coin stable?
All right. So that's interesting too. So it really is just saying that it's always equal to the dollar, but it'll have tiny fluctuations, and that comes from what really is the value of the dollar. And if you zoom in like on Forex and look at the value of the dollar, it's constantly going up and down too, like all markets. The dollar will move up a little bit, down a little bit. If it drops a whole lot, a lot of people will buy in. You're liable to see a spike on dollars, the value go up a little bit. But so stable coins are trying to always match what the dollar is doing, so that if you cash out into dollars, $1,000, then it'll remain $1,000. The value of that dollar will go up and down, but it will still be $1,000 when you go to convert back.
10-4. Thank you.
Yeah,
That's a great explanation. Back to the original point, staking.
yeah. So each place will have their own method that they want to do their staking, and so at 10%, what you get is, say if you put $100,000 in there and it's got a 10% APY, then at the end of the year you should have 110,000, you know. But whenever they do the thing where they're dropping it off to you daily or weekly, it gives it a chance to keep stacking the compound interest. So then at the end of that year, somebody knows this answer already because I said 100,000. But instead of just getting back 10,000, which would be 10% APY, you end up getting back like 18, or maybe that's too much, maybe just only 13. But because it's been stacking the whole time, you're earning interest on your money you've already made the interest on, you know?
Yeah, they said compound interest is known as like the eighth wonder of the world.
Yeah, so it's cool that a lot of these have that worked in there already. And two, that it's an argument for like, let's see, my friend Alan hit me up the other day and he was like, man, I really have been looking for some negative correlations to Bitcoin. Whenever it seems like Bitcoin's going up, the ones that go down, and the ones that come back up when Bitcoin's going down. And he said, I think I found it in Compound. So he said, as the past few days I've been watching it, and every time Bitcoin pops, Compound goes down, and then whenever, the opposite happens. And whenever I had started messing with this and I got me about 8 coins, that was something I really valued too. Like, what is the coin that is going to be doing the opposite? Not because I don't believe in Bitcoin. I believe it's going up. So this coin, technically, I wouldn't be betting on to go up, but it would only just do the adverse. If Bitcoin starts to fall, if I move over to here, then I can get some gains still while it's falling. And as Bitcoin's low, move back in at a better price.
Right.
Theoretically, sounds great. So he brought up that one compound. All right, so compound and maker and Aave, things like this. All right, so whenever you're out there in the world of DeFi, this is where you're taking a lot of stable coins and putting them up to earn interest. So, where's the best place you can earn the interest at? If you think you're stepping out of Bitcoin because you think it's about to fall some, then people will often move over to something where, at least if I'm going to stay out of Bitcoin for 2 weeks, I'm going to get a payment every day on my 10% APY. So I'll grow some in the meantime or whatever. And so theoretically it would work, but I feel like that, there's the cycle that comes along with Bitcoin that's regarding the halving, where it'll hit its bull market and rise. It'll start here underbought, it'll rise way past fair value to overbought territory, and then it'll correct real hard. And we got a bear market for a little while it finds even value and start the process again. But I feel like, because within this past cycle, we had so many things built out in DeFi, that there's going to be still real good reason to be in your coins when it's in a bear market, because it'll still be things like stable coins. You can go put them in your bank and get 0.015% interest, or you can move them over to DeFi and get 10% interest that they're paying you off every single day. So it keeps growing. They,
Right.
they built up a real good use case for the DeFi scenario. So this time, in the bear market, where I just feel like a lot of things there's gonna be a lot more to do. Last time, whenever Bitcoin, when it reached overbought and it corrected, there wasn't really a lot to do in the crypto space in those downtimes. But this time, I think they're building it out to where there's going to be a lot more happening in those downtimes.
Very, very, very interesting. So, um, I had recently, I just kind of grasped the idea, I guess, of what a bull market is and what a bullish type coin is. And from my understanding, a bullish type coin is something that you pick up, I guess, as the market dips. Maybe, I mean, maybe you can pick it up whenever, of course, but of course you want to buy it when it's low. But then it should be something that, to my understanding, is something that you want to hold on for like a long term type of gain. Is that right?
Um, well, bullish and bearish will kind of relate to market trends. They might not actually bull and bear may not actually indicate what's good and what's bad. As for now, for an example, while things could maybe go right and Dogecoin could make good use case of itself in the future, right now it doesn't really have it. So, and Bitcoin does. So it doesn't make sense whenever Dogecoin pops real hard and Bitcoin doesn't. It and Dogecoin can still be bullish. That means that it's going hard, but that doesn't mean Bitcoin isn't any good anymore, even if it's just consolidating right now or something like that. So bullish just pretty much is saying right now the trend is everybody's jumping in and it's going up. And bearish just means everybody's done with this one and they're getting out. But it
Okay.
can be a good project or a bad project. It just the bull or bear just has to do with what the trend is doing at the moment, whether it's green or whether it's red.
Right.
But as far as like a long-term trend, you can back up. The trend's always your friend until it's not. So if you when you open up the Bitcoin chart and you're like, oh, here's a whole bunch of red lines in a row, and then you zoom out to the week. Oh, it's been a whole rough week, and then you zoom out to the month, and you're like, well, maybe it's down a little bit from the month. Then you zoom out 3 months, and it's like, well, we're still way up from. And then you zoom out to the year, and you're like, as far as for right now, it's still been kind of going up. You expect it to correct some and go sideways when people get too excited and it gets overbought. Because the truth is, if we all knew it was fixing to be 44, we would have let it go at 58 too, and this rebought now.
Right.
People are just a little bit more tuned into it than we are, and they're able to help bring about circumstances to make the extra buck. Where if we're only just 1 hour behind it, it never seems like the time to sell. Oh, it's gonna bounce back now. Oh, well, I sure can't sell now. It's sure gonna bounce back. And then you wait 2 days later, and you're like, well, if it's gonna keep falling, then I guess I'm gonna sell and try to make something. And it's already turned around and going back up.
Right. Right.
Buy high, sell low. Not a
Oh,
financial advisor.
oh, pump and dump. I had to
Yep.
look up the term pump and dump.
Yep.
Wow. Talk about some schemish type actions.
Yeah, for sure.
I think the definition is like spreading misinformation. So the value of a coin, shoots up, and then the person that's holding a large amount of that coin wants to sell theirs, right?
Yeah. Yeah, like that
So,
Shiba Inu coin. I mean,
mm,
do they have some partnerships out there? Are they fixing to do amazing things? Or they bring out some new NFTs or something like that? I mean, it didn't really do anything, but what they took half of the supply and sent it to Vitalik Buterin's wallet because it's a public address, and so they was able to be like, "Hey, look, bought in half of the coin," and all kinds of people jumped in, and a ton of people probably did make money, but more lost.
and from what I read, that's actually illegal to do within the stock market, but not illegal to do within the crypto market right now.
Yeah, well, part of that will come from it probably still is illegal in America anyway. It's why Coinbase is so strict on what coins they'll let on and why we can't use all the coins on Binance and everything. But with crypto being, especially in the decentralized, it's kind of without borders. So That's why one of them, whenever you go to Uniswap, it always says at the beginning, anybody can make a token, and they can make a token of the same name and copy the symbol of the token you want to buy, and you may send the wrong person money. They tell you that out of the gate. So it's wide open in that sense. And
Wow.
so you kind of got to I don't know, they just try to give you other tools to do it the right way to filter past, but there's still people that get got every day. Like that's one of the reasons that we try to use CoinGecko. And if you can't even find a coin on CoinGecko, then you got to really know something about the project to take a step, like your friend that reached out to you and letting you get in on the ground floor. Well, if you know this dude and you don't think he's trying to just get you, well, then you got a reason to get in there. But if anybody else is to hear about it and we're like, oh yeah, and you look up CoinGecko and it's not there, so you can't even they verify the address so that you are for sure getting the coin that you want, the real one. And if you can't do that, then that's it's kind of a mark against you as far as trying to look legit.
Um, all right. So on that note, I have a question for you. A friend of mine, he said he wanted to make a coin, but the idea that he had was already taken. But then it was quickly abandoned. So he wanted to name his coin Soul Coin. But somebody else had already made a Soul Coin. Now he's trying to find out how to take over and revive a dead crypto. Do you know if that's even possible?
So he's a developer. I mean, he develops shit already.
No, I mean he's within our hip hop community here in Nashville, and he has a
Is it
group
just
of folks,
about?
right?
It's just about him taking over the name, or actually taking that crypto
I think
control of it.
well, I guess I'm not sure. I should
Yeah,
ask him now because with what you just said, if it's just the name, then it doesn't matter, right? The names aren't. Someone can make a coin just like somebody else's.
yeah, right. And it would just determine on which one gets bigger because it's out of jurisdiction for a lot of those laws that we're used to. The same laws keeping us from being able to get into coins we really want is also the ones we're used to. No, if you're in the same business, you've got to have the same name. It's got to be different. But so he could reach out probably as far as getting, if they ain't using it no more, that he could buy the domain name off of them or something like that, or else. To get see in crypto it's normally where it's the constant chore to try to become more decentralized, so to get control of a coin is kind of opposite. Like you can, if you like a coin and it's out there already, well, you can make it to where you accept that coin on your site, you know what I'm saying? And then just start pushing it and buy as much of it as you can, use it for rewards or whatever and get it off the ground. But otherwise, you would have to step in on the development side to make it do the things that you'd want. But if it's been abandoned, you just need a developer to show up and develop it to be what you want. And then if it turns out that somebody else is in there, they can either join your development team or else, uh, you know, you'd be in conflict and maybe you do want to create another one. But that is important, as far as like, is the coin that he's saying is already taken? Is it one that you have to, is it set up for staking? Is it actually a blockchain or just a token? And does it have to be mined? Those kind of things.
Yeah.
Or
No.
else, yeah.
So he actually hit me back. He said, "Turns out I can take the coin, but I'll have to consolidate my wallet to ETH." And I was like, "Consolidate which wallet?" And he said, "I said like anyone or just one." He said, "Bitcoin and Doge." Interesting. Maybe he was talking about an NFT. I'm not sure. Nah, he said it was a coin. It was a coin.
I
It
mean,
was a coin.
I really want to get a coin off too. Like I've done went and bought, especially after we talked to dude the other day, and he done went buying up a bunch of domain names. I bought grindhustlehustle.eth and grindtoken.eth. So he said he had grind.eth. Okay, I'll give him that. It's gonna be hard to get, but grind token I got and grindhustlehustle.eth.
Right.
So I would really like to make a token, and for one, I want to kind of do it where I got NFTs are awesome, and I'm not taking anything away from it, but it would be cool to me if I could drop a token that's more generic, or fungible. NFTs are non-fungible, so if I had a token that was fungible and could drop that in as far as online orders go and shit like that,
Hmm.
and then as of right now, I would just be like, okay, as many perks as I can add to this token concerning my music and shit, then I'm doing it, as many as I can. I'm looking for any kind of ways. If you hold at least this many or something like that, then you get this. Every year you're eligible for this. If you've hold the tokens, as soon as you hit 1 year, you get a pack sent out, anything I can come up with that I don't really care how weird is, just because I like to fucking make that kind of stuff. I like to make it kind of pay off. So I would dedicate myself to pulling out as many use cases as I possibly can from it, but I would like to take it to the level to where it's like, okay, we've got a tour set up for 2 months. We click this partnership with Shell because every time we fill up on this whole tour, we're going to do Shell, and I'm going to take a picture standing outside the Shell and run it on my Instagram when we fill up each time. And anybody that's holding grind tokens in their thing, whenever they show up to a Shell gas pump because they're part of the sponsor, they can scan it and they get 25 cents off a gallon or whatever like that because they're our fuel sponsor, and I'm in with the grind. Any
Yes,
kind of
sir.
way I can come up with to put any kind of use case. That would be like the rest of my life's work, to dedicate to as many partnerships I can form that give a benefit for holding those grind tokens.
Yes, sir. Indeed. Yeah, the coin gecko has been very useful to me. I guess if I stake some stuff, I guess I need to check out Celsius and what's the other one you said? Celsius and Kraken?
With my two, I found that I get better on my Ethereum at BlockFi, but I got better on my Bitcoin at Celsius.
Yeah.
So I
See,
kept my Ethereum in the one because I think at Celsius it's like 5%, but at BlockFi on Ethereum it was 5.25. So it's just a 1/4% more, but if it's sitting, and then I think it was the opposite. I think on BlockFi for Bitcoin it was like 6.05, but then over there it was 6.25 or something like that. It was very close, but I just tried to sit them in the one that was better at the time.
yeah, I had just took a look recently at Staking Crow, which of course was the first coin that I bought inside of the crypto doc crypto.com app. And I was surprised to see I think the highest they go was 6%, I believe. It might have been higher, but what I was contemplating on doing was 6% for 3 months. And then I did the math and I was like, maybe I'll wait a little bit longer to see if we jump back up before I do that. But
Well, here, all right, just as I've over time kind of become more familiar with your situation, the things that get the best percentage is going to be like, say, your stable coins. And so this is in the way to where it's if you got $10,000 cash, you convert it into $10,000 USDC or USD Tether, and then you stake those so that they're earning 10 or 12% over the year. You know what I mean? So that at least at the end of the year, they did stack up another rack. Now, it's different whenever you're looking at coins that can go up a 5x, then it's hard to take 10% on your money. But that's really like whenever people are out there gambling on the stock market, I'm calling it gambling, but investing in the stock market, and they're hoping each year to get a 15% return, those same people could have it at their bank account and only get 0.05. They're out there taking a risk in the stock market to get the 15%. And we're taking a risk with crypto trying to get our 5Xs. But the conservative move in there is convert money that you're not trying to put on the open market and take a risk whether it rises or falls, but instead do it in a stable coin where you get your solid 15, your solid 10% or 12%. And since they do it compound style, it's going to make a little bit more than what it just looks like. If you put 10,000 in there in the year, it would make you know, instead of 1,000, 1,500 back or 2,000 back.
Right.
But it ain't gonna do a 5x like if you had the 10,000 in a Bitcoin and it goes to 200K and then you turned it into 48,000. You know, it won't get those kind of returns, but it's the steady ones that that's what's making DeFi so strong. It's because all the people who aren't trying, they didn't want to learn about a new coin or whatever. They don't want to hope that this company does good and they don't sell out to someone else or their product become irrelevant. They just want it sit somewhere where they know they're getting their steady 10% each year. And DeFi is just killing it in that. They're beating the banks hard and they're so much less risky at this point, it seems, than if you're in stock market, you know, you're hoping to get 15% or whatever. So so I would say in some of that you have not yet felt like taking the plunge into an investment, especially as since you've been in, you've seen it drop hard too. You know, that that hurts whenever, you know, if you got a lot tied up in it and then it takes a dip like that. You know, $1,000 off of each of my ETH last week, you know, and I got 60 of them. That was fucking hard hit.
No doubt. Yeah. Okay. So decentralized finance. This is the outskirts of the internet where this exists. Is that is that the definition of as opposed to just like crypto being more in the centralized part of the internet, or am I just totally way off with this?
No, the so Ethereum made like the computer that allowed the smart contracts. That's the network that allows the smart contracts. So that's where the decentralized internet is being built on. Every time you build an application onto that, you're building out the decentralized where it's available worldwide. It's not by jurisdiction. And this is where a lot of decentralized finance things are on. So, you know, uh, cryptocurrencies being decentralized, you know, like they could go, you know, right now. This has been the big issue with Ripple. We've all been behind Ripple thinking, oh, yeah, it's at least it was been number 3 for so long, you know, you're at least expecting to, and then here everything gets ready to get going and they get a lawsuit and have to go to court. Well, Bitcoin don't got no CEO to go to court. You know, that's what decentralized is. No one's at the head of Bitcoin. They can't hit them up and say, come do this. It's everybody's got a computer on as part of it, you know. But if you got a company that's not completely decentralized, well, then they're going to be obligated to show up and for Senate hearings and all these kind of things, you know. So I believe with Ethereum, it's gone to decentralized, and now Vitalik is just taking a part in like the development groups, you know, that are trying to help build things onto it and upgrade it. You have to get votes to get all that kind of stuff to pass, but he isn't. He can't go and push buttons and make Ethereum do things anymore. That's become decentralized, you know. That's
Why
part of.
does
Uh,
to interject real quick, why does this all remind me of the movie The Matrix a little bit? It's like, oh, there's all these machines and stuff providing this energy to make this reality happen, and this brings me back to some scenes of The Matrix where all these machines were starting to break down, and then the next thing you know, it was like a electronic monster or something with its own tentacles and everything like that.
yeah, yeah, I remember that was supposed to be in the real world part. And the Matrix just looked like the world that we're living in now.
Yeah, exactly.
Yeah, I don't know what role this would fall under, you know, because I hear a bunch of in the beginning, especially when you're trying to tell people about Bitcoin, it sounds like the mark of the beast or some shit. To some people, like whenever you just speak of what it is, they're like, "No, can't you see that's like the end of the world?" You know. And I think that people are missing that very soon. So much is going to be digital, like digital money anyway. If they want to use the one that the government issues, they'll still be free to. You know,
Yeah,
this
right.
is a war on a monetary policy as far as we're giving you something that's got a cap on it and it's going to do, you know, hold value in its own way. Observe it, you know, just look and see it. So it's an experiment to see if you could make decentralized money and that cannot be tampered with. You can still be free. Just don't think that you're forever going to be able to hold on to the paper, you know, even now people don't want all their paper on them. They want it in where they open up their phone and see how much they got. They don't realize they're already living in the digital money world anyway.
Right.
The cryptography part of it is just to keep it from being counterfeited, you know?
Yep, exactly. I mean, I love it because the idea of money in the first place, you know, man, I could go kind of deep. I'm gonna try not to go down the rabbit hole too far, but like the idea of money in the first place, from what I have read, came about where around what they called the Fertile Crescent Land, which like thousands of years ago. It might have been where present day Iraq is at, but there's civilization started, man. So instead of going from the tribal situation of hunting and gathering food and always having to move with your community, they were like, look, we're gonna settle down and do this thing called agriculture. And we're going to do this thing called agriculture. And you're going to be able to eat this same time next year. You're going to be able to eat. But we need you to go out there and pick these vegetables, or, you know, take care of these husks of corn and do this for us. We, on the other hand, are going to take everything that you go out there and get, and we're going to put it under lock and key. You know, from my understanding, that's how money even became a concept on like a community level, like not like a trade and barter type thing, but as far as like a currency and you see it all the time in the South. I mean, I'm pretty sure Tennessee state seal is the same thing. Agriculture, commerce, you know, and just to see a different, you know, concept of money come about, which I pretty much came about because of the practices and the transparency, and, you know, that's what's different about it. I mean, a lot of it still acts the same, right? As, you know, I mean, crypto and the stock market, they're not too much different. But the reason why it came about is what really interested me. And I watched the documentary probably about 3 to 4 years ago. And it was on Bitcoin. It was about Bitcoin, and it was on Netflix. And and they were talking about, or it was about Bitcoin and how this man had a brick and mortar in New York, like downtown New York. I think it was across from the stock exchange on Wall Street, very possible. And then he ended up going to court for this and that, and next thing you know, the guy that was like prosecuting him was like got out of, or the judge or somebody that was in the position of power got out of his job and was like, yo, I'm gonna go dig into this. I didn't explain that too well, but that's the first time I heard about it, was about 3 or 4 years ago, watching that documentary. And, you know, that's when I heard about the blockchain and Sakamoto. I forget how you say his name.
Satoshi Nakamoto.
Yes, Satoshi and stuff like that. You know, that was a very informative documentary. I wish I could remember what it was called. I think it might have just been called Bitcoin, but I tell people to check that out. Also, Russell Brand just made a video on crypto. You know who I'm talking about? Russell Brand.
Yep.
Yeah, and he was really explaining like super basic stuff. He was like basically reading the script from BBC. Apparently, BBC did some type of article, and they were just asking like the most basic questions, and he was just like reading the questions and the answers was all he was doing, and he was like learning himself. But yeah, just watched that yesterday.
Yeah, man. As far as the changing over the money, you know, at that time when you was talking about, it would be like, if I'm gonna live my life, then I'm gonna be able to go out there and hunt. I'm gonna be able to farm up some food. I'm gonna have to know how to shoe my horses and make our own clothes and all these things, all these tools that you have to carry with you. And then you're like, you know, I've become the tradesman of all these different things so we can head out west and be able to handle our shit, you know. And then you run into somebody with a fox fur. You're like, oh, okay, so now I got to go learn the fox fur too. Because if I want a fox fur, now I got to catch these foxes and cure. It's like you just constantly have to keep on going until you got like the trade. I got all these chickens and you got them fox furs, so we do the trade. And so from there, it would just be like, as so many things, maybe different times a year, it keeps moving around, however it comes, that gold is seen to be the thing that is scarcity is kind of the most under control. People always want it, doesn't matter what year it is, what time of year it is or anything like that, that the easy medium of exchange. And so now that's transferred into where we got these papers, and the value of them is, if I'm holding $1, it's a fraction, 1/20 trillion. And that's the value I got to go buy something. And every time they print another trillion, I still am holding $1, but it's 1/21 trillion. And now, even though it's still $1, it's lost some of it because the fraction at the bottom got bigger. And then they do it again, and it's 1/26 trillion. And so it's the supply that keeps on dwindling the power of the dollar. And that's what the experiment with Bitcoin was, to put that cap on the supply, just so that at least you have something that people can't steal from you somewhere far away by pressing the print button and making more come out. That's what the whole security of Bitcoin is, that there is only 21 million, and it has to keep on confirming that in a big loop all day long with all them miners, that there's still only 21 million and they're exactly where they're supposed to be. And as long as that works, it, as far as that goes, it is irrelevant what Bitcoin's price is in regard to dollars. That none of that was never important. The important thing was, if I'm holding one Bitcoin, it's one Bitcoin over 21 million, and that's not going to change. 10 years from now, it's going to be 1/21 million, and nobody can print more to rob me of my value. The dollar value may change, all kinds of different values fluctuate, but the one Bitcoin will always be worth one Bitcoin, whatever that is in dollars, and nobody can take that from you. Like the dollar value is only worth $1, but where you lose it is in the other part of the fraction, where they keep adding more and more and more to it.
Oh, wow. I did not know it like that. Okay. Wow. Can you hear me?
Mm-hmm.
Okay. Just checking. We're still here. We're still here. All right. Yeah, man. Wow. I did not think about it like that. I was just thinking about it from like a thieving perspective, the government being thieves. I was like, oh man, you hear people complain all the time. Oh, my tax dollars are going here. My tax dollars. I'm like, man, you know what the fuck you mean tax dollars? You have no idea where your money's going or who's putting in their pocket, or oh, maybe they need more tax dollars. We'll just print some more out if you want. Bing, 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 bing. Like, yeah, man. So that I was looking at it from that perspective, but when you put it in that type of light where they print more and demand, the more supply you have, the less rare something is, the more it's worth. The more plentiful it is, usually the less it's worth. And I guess demand comes into play as well. But yeah, okay. Wow. That makes the most sense now to me.
Yeah. Yeah, and then when they go to calculating how much inflation is affecting the dollars, they use shit like the corn and the milk that ends up getting subsidies, so that the price stays at a reasonable level where a household can go get it, but all the stuff around it's still going crazy. If you tried to do any kind of building, the 2x4s was like $2.50 a year or two ago. Now they're like $7. Everything, raw building materials is where you'll see it first.
Wow. Yeah, I've seen in Tennessee or Kentucky, some group of people said, forget it, we're gonna mill our own wood. And they started on it.
It's really a big up to which MTSU is one of the big ones in the country that has the concrete management as a major. And there's a whole lot of rock out here, and concrete will probably continue. It'll take the place over a lot of the wood. It'll be up in manufacturing cost, but it should level out to a degree. Right now, we're just taking too many trees down for building. That's making making the value go crazy.
Man. Yeah, that's no bueno.
I digressed a little bit there. But industries that will probably be popping is going to be concrete continually because they're going to be more and more stuff out of concrete.
Yeah, man, I did take the initiative and I bought a notepad and I started writing down like all my well, all my passwords, including my seed. What are they called? Seed links,
Seed phrase.
seed phrases,
Yeah.
and also started to write down all my transactions. So I just went to my app, for Crow. I went to the Crow app, and it shows me every time that I bought a coin, how much I purchased in USD, how much coin I bought. And then after I got to writing down, I was like, oh, it also tells me like how much the coin was worth whenever I purchased it.
Yeah.
Um,
And I usually let all of that just keep up with it where it's at. I mean, you can write
yeah,
it down for now, but I believe it'll get overwhelming after a while.
yeah, yeah. I was advised to write all that stuff down, but yeah,
Okay.
it's like you said, the app pretty much stores it for you. At least two of the different apps that I've checked. I guess probably all of them do that. Is that right?
Yeah,
All the
to
ones
my
you've looked
knowledge, they
for?
all got transaction histories in them.
That's cool.
And I'll be on them too whenever I go to move something because sometimes, it takes 10 or 30 minutes for it to pop up in the other address. I'll be going back and forth, make sure it's in the transactions. Okay, there's something pending. Is it pending in the new place yet? Don't say pending in the new place yet. What's going on?
Right. And then I just learned last night about the miners and how it's like a race for them to like whoever can figure out this equation, or is it a transaction? Is that what they're computing is transactions, and it's their computers that are actually doing it, or maybe it's people behind the computers, but and then they get paid for say that they're working for Bitcoin, they get paid X amount of Bitcoin if they solve the transaction first. Transaction being like one person selling Bitcoin to another from this wallet to that wallet. Is that accurate?
Yeah, man, it is complex. So I won't pretend to be a mastery of this all the way. But in Bitcoin, yeah, I guess they're competing for. All right. So I think you try to break. I think you have to solve the whole block. And whenever you solve the whole block, it's almost like there's a luck percentage involved into being the first. So if you solve that block, like say I could go out, turn on a Bitcoin miner, and that thing could solve a block tomorrow. And I think the reward right now is 6.25. Boom, get 6.25 Bitcoin. And then the rest of the year, it may not solve a whole other block. So if you're in a place like that, then that's why you would join a pool. And that way all the hash power is working together. And throughout each day, someone may solve at least one block because you got such a large pool. And that way everybody keeps getting a little bit. Since you're in the pool, it might have been your computer that solved the whole block, but in the pool, it just guaranteed that you're getting paid every day as much gets solved by all the hash power. Now, I think the best I can understand that's the way that Bitcoin's goes, and Ethereum's is different in the way to where there's a bunch of transactions out there, and the miners just have to be able to organize them into their blocks, and you can go out and pick the transactions that you want. If people are paying high gas fees so that their transaction goes through fast, everybody wants those, so they're racing to grab those and batch them in there and to make more money, and they'll be scalping them. And that's what a lot of times will make where if you put in an order, but you put the minimum gas fee that you possibly could, it could sit there for like 2 hours because the people are actively picking all the ones that are paying more. And by that same turn, to my understanding, if I'm a miner, I got a miner going, I can put a transaction out there with zero gas fee in it. And nobody's going to grab it and do it. But because I got a miner, I can manually go grab that and put it in the block that mine's building and then get that transaction in for zero gas cost. So that's something that also I would be wanting to try to tie in when I was talking about the grind tokens earlier. If I can work it in where anybody holding grind tokens, I can get past their gas fee and let just my miner cover all the people in my network or whatever like that. I'd be with that, any kind of
Right.
way I can come up
Definitely.
with use cases for that kind of stuff.
Definitely. Definitely.
Yeah, I don't know about how all the other, I I got miners right now that aren't running. I wish I knew more about mining. That's probably what I should be doing right now, studying miners a little better.
I'm not gonna lie, man. As the market kept on dropping and dropping, I started doing some math with the presumption that it was gonna go back up eventually, especially with Bitcoin. And
Hmm.
I was like, damn, man, I might just buy like a third of Bitcoin. I did the math. I was like, I can't quite afford a third. I was like, maybe I'll just get like a fourth. I did the math, and I'm like just shy of purchasing like a fourth of Bitcoin. But if it shoots back up to where it was or higher, I'll definitely make some money.
It's the worst thing in the world for me to sell my Bitcoin right now at these prices so fucking low, And I do believe that the bull market's not over. This is a consolidating time. I do think it's going back up. So I would be, if you get 0.28 of a Bitcoin, then you'll be in the 1% of the world because there's not enough for everyone to get a whole one anyway. Just 0.28 separates you to where you'll be in the 1% as far as like being able to provide for yourself. Um, so I would say that quarter is a real good goal to try to do. And now, with it being your only holding, I do think it's a long term play for me because I hold all these many coins and I don't know where they're going to be in 10 years, but in 10 years I believe Bitcoin will be $1 million. So all these coins that I have right now, come September, I expect a dip, and we maybe not, since we just did this hard dip. Maybe this is the one I was expecting to come and maybe it doesn't, but I expect a hard dip, but I expect us to actually not peak out to our highs until between November and January or February, something like that. So, in all those times, I'm going to be more or less trying to look for a good opportunity to exit. One day when I open it up and everything's crazy in the green, like the candles are so fucking high each 15 minutes, that it's so far away from the averages. See, them average lines, they usually always come back to them. So if you open up an app that's showing you your averages, you can be like, this is too far away from the average line. It's going to come back down some. That's when you know it's a good time to sell. Or when you're way beneath those average lines, you know it's underbought. It's a good time to get in. And so whenever I'm looking for a time when I think everything's just crazy super in the green and I can be able to back up and feel like I didn't fuck this whole thing off, it would only be to let it come back closer to those average lines and then get back in next time with 10 Bitcoin. You know, right now I've got like 0.37 and all these other coins, as much as they're stacking up to be a different value in dollars, I think they'll get a higher return this year. But Bitcoin, I think in 10 years will be $1 million. So all my moves this year is just so that toward the end of this year, I can try to get a bigger stack of Bitcoin. And then with that Bitcoin, I'll choose in the future if I want to invest in other little ones again. If I see some that's got looks like they're doing a real good project, then I'll spread some of it out, but the main purpose of this all was just to stack the Bitcoin primarily.
Gotcha.
And so I stand behind, yes, it is a real good goal to try to get to at least that 0.25. That's very good. But also, if there are other opportunities to where you can get a 10x and get back in with a whole Bitcoin rather than just a 0.25, then obviously that's better.
Right. Right.
So too, all right. So whenever we was talking about when you take profits, because whenever there's a hard correction, usually Bitcoin will go down 5, 7, 10%, and everything else will go down 17, 25, 29%. So whenever you got your altcoins up real good in the green, pull profits from that, move it over to your Bitcoin. So even though right now, if you just had one Bitcoin and five other good altcoins. As them motherfuckers pop up hard, you sell pieces of them, $500 off of it and buy a Bitcoin. Because if anything, you got one that's up 30% and Bitcoin's only going to be up 5%. So it's still even a better kind of buy to move over. But you lock yourself in as your Bitcoin is always stacking. If there's a hard correction and all them others drop by 60%, that your Bitcoin only drops 15,
Right, right.
you've been
No doubt.
stacking a little bit more stable coin. In the stock world and money world, Bitcoin's so crazy volatile. But when you get over here into the crypto world, Bitcoin's the most steady of them all.
Well, yeah, man, I'm extremely hyped now about staking. I really want to delve into these other applications now, the ones that pay you daily. That's crazy.
Yeah. And then too, man, this and this is I'm bringing up some of these subjects because I know at this time uh, there's a reason to be a little bit uneasy about what you can do with a large sum of money that isn't going to bite you in the ass real hard. I know you're in that place where only put out there what you're willing to lose, and you're not willing to lose that. So that's why
Right.
you ain't put it out there yet. So you're following the rules so far. So that's why I lean more towards some of these opportunities that I'm saying is in what's it called? Stablecoin.
Altcoins, stable coins.
Stablecoins, yeah. Because then at least you're getting the 10% rather where, I don't know if it's in a checking account or a savings account for you, but in a savings account, it's still just earning fractions of what it'll earn in a stablecoin form. So this dude, his name is Andrew Cronje. So he started this deal to where he got up every day and opened up his computer and looked at all the different locations where you could earn on your stable coins, and that the interest rates fluctuate daily. So he'd open up his computer and he'd be like, okay, so today Aave is given a better interest rate and on this coin on Tether, and Compound's given a better interest rate on USDC. Both of these are stable coins. They're both just dollars. So he'd be, all right, his daily thing, get up in the morning, move my USDC to this account, move my Tether to this account, da 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 da. And now they're earning the best. Wake up the next day, repeat. And that was his job. And he earned great doing that. He was at a point to where he was getting maybe like, I don't want to say crazy numbers, but he ends up.
Just $200 a day.
Well, it's all going to be in percentage wise to however much he's moving around. So much more than that because he was moving around more money than that. But so he ended up developing this thing called Wi-Fi, which is Yearn Finance, and it's an automated thing to where you go in there and you put in your stable coin and it moves it automatically to the place where it's earning the best interest. So he tried to make the full thing automated. He tried to make it where if Tether, look at every single place stablecoins are earning, and if Tether is earning the best of all of them at this location, then convert everything into Tether, move it to there, and earn that for the day. And tomorrow, look again. And if it needs to be USDC and over here, we'll change it up and do it. So in that form, it kept bugging out. So he made it to where if you put in Tether, it will find the best place for Tether to earn, but it's not going to change it to USDC anymore. If you put in USDC, it'll find the best place for it to earn, but it's not going to change it to Tether. So you plug into Wi-Fi and put your stable coins in there, and this starts moving it around. And they was getting like 30% a year on some of that shit. So now you're looking at, imagine I can go out and get a $10,000 loan for 25%. So they want back 1250, but I'm going to put the 10,000 into Yearn Finance and it's going to feed me back 30,000 by next year. I don't care to pay their 1250. Here's your 1250. And then I made $17,500. You know what I'm saying? For doing nothing, just taking out the loan and putting it in there. So as this thing starts taking off, that's why you see a Wi-Fi token valued more than Bitcoin. It does have to do with there's only 36,000 of them and Bitcoin has 21 million, but it's grown. Those 36,000 tokens there's value in that protocol. So in your case, that's something that you should look at in a way to where you can be like, I don't have to risk buying a coin and seeing if that coin goes up or down. Instead, I get a stable coin and plug it into something that's going to earn proper, and then, if it's all working correctly, then it wouldn't even matter how many loans you took out this year because your return is going to be a 3x.
Right.
So it don't matter if they're charging you 30% or even 100%. If they're charging you 100% for the $10,000 loan and you have to give them back 20,000, it's okay because it made 30. You still got the 10 profit.
Mm-hmm. Yeah.
So Yearn
Makes
Finance is one I think that you should read around in too, to just see if there's experiments that you can run with stable coins where you aren't really taking risks in projects winning or losing, but just on regular interest because people need liquidity right now. Because DeFi has to get all the way built out like the current financial system. All the things that you need from your current bank, DeFi needs to provide that. If you want a home loan, you need to go to DeFi to find that. And the only way it'll work is if there's a big pool of money to be able to handle these things. And that's why they're
right.
paying you so high interest. They need it all built out right now.
Cool. Like it. Dang.
And see, like me, so now I went and took my Ethereum and I put it up over there in BlockFi and took out a loan against it to go work around and all this. Well, when I put that Ethereum in there and they sent me stablecoin with USDC, I owe them back USDC. That Ethereum still sits there, so that USDC had to come from somewhere. And it came from somebody who isn't trying to risk their money in coins. They're just going to put their dollars in there and allow it to be loaned, and then they get their percentage back.
Right.
So you can take that role in this, but you're still helping the whole thing move forward without taking too much risks. You're only
Right.
providing paid for your service.
Definitely gonna look at that. Um, did you mention Yearn coin? Yearn?
Yearn Finance is the name of the company. Their coin is Wi-Fi. So
Okay.
YFI is the coin for
Okay.
them. And that's a governance token. It doesn't even, as far as their use case, holding them just gives you rights to vote. So I basically explained the basis of the protocol, but if there can be anything that can make that work more efficiently or better in the future, the only way that it goes into place is those governance tokens. You have to have your governance token be, go to someone who's supporting the upgrades that you like. Just like Ethereum, this one just came through to where Ethereum goes to staking. A lot of people did not like that. Everybody with an Ethereum miner fought back against that upgrade. Nobody wanted it. The only way that it could work is the way that you call like a 51% attack. You have to have over half of all the power leaning toward what you want to do to make it work. And in this case, that's what staking Ethereum 2.0 was about. All the Ethereum that people sent in to stake for Ethereum 2.0, that is securing the votes that part of the protocol will go into the blockchain.
Wow.
Nobody can just push the buttons and say now it's in there. They have to have the staking interest of 51% of the network, or in their case, it might not have been 51% to get an actual thing, to pass. I'm not sure 100% on the 51, but that's what your staking was for. It was putting your coins in the vote that staking should be how Ethereum's validated rather than mining.
Gotcha. A big gripe I hear from all my friends from the area. They say, yeah, Nashville, everything's going up, but the blue collar jobs are not. You gotta get some more skills, or you gotta figure out a way, like this crypto shit. Word
Yeah, I
up.
mean, you learn. I mean, bro, it's a brand new financial market. You know what I'm saying? Like, it's like to see all the things that are getting built out, the infrastructure. Man, we're just so way early. That's really all I'm trying to get at. It's all changing so fast, and just the fact that we know that it's changing puts us way ahead of the people in our peers that are talking about this are going to be financial giants of 10 years from now. because they're bothering to learn it whenever it's still brand new, you know. Like I said about Bitcoin, it's not necessary for the value to constantly go up or down. It's just necessary for it to maintain
Be
21
around.
million, you know. We're just so there's going to be a time, you know, it could be 4 million, 10 million, and it'll be a lot less volatile. Right now we see the spikes crazy every day. It'll be a lot less volatile and seem less boring, but it'll remain, you know, the 1/21 million, that constant.
Yeah.
To be here right now whenever people aren't really understanding that, that's where uh the great advantage is, and the great opportunity is in just seeing it now and being here early enough to try to get a grasp on it.
I feel you. I actually had a moment today where I was like, man, I'm kind of blessed because, you know, after high school, I actually went to junior college to learn e-commerce, which mainly dealt with me building websites and stuff like that. But I stopped because this is 1997. The people that I made music with, Hostile Records, my buddy he built our website himself. Like he learned HTML from the house and everything and was coding himself. And I was like, well, I'm learning stuff from him. I'm like, why am I paying money for the school to teach me? So like an idiot, I dropped out. But I knew back then that was going to be the wave of the future. And here we are now. And
Yeah.
just like I heard one YouTuber talking, saying that like this is pretty much going to be like 20 years ago when people were trying to learn the internet.
Hmm.
Like this is like the new thing that's, you know, intertwined with the internet that people are learning now that everybody will probably eventually pick up on.
Yep. For the good of their finances, they will. And if not, then they're still going to be living day to day with them whatever USD coin that they throw at us two
Right,
years from now.
right,
And see
right,
too,
right.
the thing like we're leaning toward is like that the universal basic income. So they're putting the dollar in this kind of place to where in the future it won't matter. You know, I mean, right now to think about how much it costs us every time they print money, but then they're just going to be spitting it out every month, you know, to make sure everybody's got their $2,000, you know, whatever they consider the livable wage or whatever. And it's not going to hurt everybody so bad that they keep printing more because that's not something you're supposed to be saving. It's disposable. It's going to go down in value. When they give it to you, they want you to go out there and spend it because that's how they perceive a good economy to be. You don't save up those tokens because they lose value. Every month when they print more, the value will go down. You get them, you spend them. If you want to save or have something that grows, you'll move to a fixed asset like Bitcoin every time you get your little, you know, disposable thing they send.
Enough said.
All right, brother. Well,
All right, man.
this is Nate with Grindhouse Capital and Raw Proof. J. Marinko. And peace.
Yeah.